Hi everyone, and today we will be looking at some of the stocks which are currently trending or any specific news. So the purpose of making these type of videos is that when I was also not working as an equity research analyst, there was a huge mismatch of the news which was coming in the market about stock specific or anything macro, and it is because that people don't have that time to read. So I will be making two videos on weekdays which will be based on what are the stocks which are trending, whether it is for good reason or bad reason, and also on weekends when we will do research about any specific companies or sector, so that way we will be updated what is happening in the markets. So just a quick disclaimer that any stock we are going to discuss over here is not a buy or sell recommendation. So first let's start with the Nifty today. So Nifty was 0.8% up. Now today overall markets were up except the defense sector, because now after the ceasefire there is a little bit relief in the market, so that's why we can also see over here that the market is going up a bit. So the first company we are going to discuss about is the Genus Power. So Genus Power is into the metering solution. It makes smart meters, and there are some other competitors like CG Power and Shivalik Biometal which also makes smart meters, and Shivalik is into the shunt resistor part. So one of the interesting point about this company currently is the PE ratio. 1 year ago it was trading at a PE of 130-140, and now currently it is trading at a PE of 39. So we can see that it is giving consistently good quarter on quarter results. That's why there has been a good PE re-rating happened in this company. So now let's take a look at the fundamentals in Q4. So it has given a EBITDA margin of around 22%, which is a good improvement from the last few quarters, and they have given a revenue of 937 crores with a PAT of 129 crores, which is almost double from the last quarter. And if you look at their yearly results, so they have given a revenue of 2442, which is double than the last year, and they have given a margin of 19%. So that's a huge jump. And even if you look at their PAT, it has jumped up from 75 crores to 298 crores. And one of the reason is also because that they have become more efficient while scaling the business. So one of the important metrics in any company we should look for is whether their CFO is negative or not. If you look at the CFO, it is negative 443 crores, which is definitely not a good sign, and their net cash flow is minus 235 crores. So this is something which is not good in the company. And also even if you look at their cash conversion cycle and working capital days, it is very high. The cash conversion cycle is around 275 days. So one of the main reason working capital rise in FY25 is that mostly because their smart meter projects moved into the execution phase, but the company is confident about their inventory levels and the debt they are going to reduce eventually in the coming quarters. So let's see how much they stick with their plans. And yesterday, while one of the directors were in the call with CNBC news channel, so they are expecting that their margins are going to go up to 18%, and also they are focusing to reduce their working capital days. And even in the con call, they have said that for FY26 they are expecting that their revenue is going to touch 4000 crores, and they are targeting an EBITDA margin of 18%. So even though they are giving an guidance of EBITDA margin of 18%, but it is still lower than their Q4. But the company is saying that they are going to install around 70 to 80 lakh smart meter this year. So that will be one of the big boost the company can see in the financials. So that's why even different research firms are also bullish on this company. And also the company has said that currently their order book is at around 31,000 crores. So that is a very huge number. And also they have entered into the cities like Tamil Nadu, Madhya Pradesh, Haryana, and they are getting upcoming tenders from the West Bengal, Telangana, Kerala and Karnataka. And now if we take a quick look at the technicals, so currently it is trading at a price of 375, which was similar to what it was in the 2024 October, but the difference was the PE ratio of 73 in 2024, and now currently the PE is 34. So that is a massive drop in their PE. So their PE is more than halved. So that is a very good buying point according to me, valuation wise. But as it's a small cap company and the projects are government based, so if there is any delay or anything wrong in the projects, so that will definitely hurt them. So there is a lot of risk involved. So we should think it that way. But if I have to summarize it, it is currently trading at a very good valuation point, and company is looking good for the coming future. So the next company we are going to discuss about is Enviro Infra. So Enviro Infra is a company which is in the wastewater management segment, and there are other companies like Vatek Vabak and Just Engineering. So these three companies are very good companies in the wastewater treatment segment. So one of the issues Enviro has faced this year is that there was delay in payments by the government by the Jal Jeevan mission. So after those delays of payments, there was some stress in the working capital. So even after this delay issue, the company was still managing and doing good with the crunch of the liquidity, and they are saying that the cash flows are going to improve in the coming future after this point. Now let's take a look at the fundamentals. So in this year, they have given a revenue of 1066 crores with the margins of 25%, and their PAT was 177 crores. So one of the good point in this company is, like, even after the stress scenario which happened overall industry wise, ROE is 27.4, ROC is 31.7, and look at their PEG ratio, it's 0.24. So that is a very good PEG ratio. Like, a company having a PEG ratio below 1.5 or 1 is a very good sign. It means that the earnings of the companies are growing very fast. And now let's take a look at their cash flow. So currently, they have a negative 47 crores of CFO, but if you look at the net cash flow, it is 162 crores. So one of the main reasons their net cash flow is positive is because they came up with an IPO, and we can look in the corporate actions. So they came up with an IPO with 3 crore 86 lakh shares in the market. So one of the main reasons they came up with the IPO was they want to clear the debt which they have, and also they wanted to improve their operations. And if you take a look at their reserves, currently it's 819 crores, which was 155 crores, and the company had more debt. So after this IPO, now currently company is in a much better position compared to what it was last year. And now one of the main reasons we are talking about this company is that company has got a huge order of 306 crores of worth into the renewable energy sector, and also their current order book is around 5000 crores. So that is a very huge number. And also, if you take a look at their management guidance, what they have said in the current con call, so the management has said that the margins were volatile, but they are expecting that the 22 to 24% is going to come from the infra, and 18 to 20% is going to come from the renewable segment. And also this industry is little bit riskier because of the payment delays which happened recently, and also this sector is a little bit cyclical. But the management is saying that they're focused on taking a project specific and a cautious approach, and their strategy is working and improving their cash flow, and also keeping asset light model. The management is expecting 35 to 40% CAGR, which is primarily going to come from their execution part, also their clean energy expansion they are currently doing, and also there is some tailwinds happening in the government based sector. And from Q3 Q4 FY26, they are saying that they are going to see new projects coming in, and because of that reason the margins are going to increase. We are going to see good improvement in the financials. So to summarize this company, even though this company is working very government based projects and a cyclical industry, still they are able to maintain their balance sheet, and still they are growing very fast. So that is a very good sign, and we should track this company for the coming future. And now let's take a quick look at their technicals. So currently, after the order news, so the stock went up 11%, and with a volume of 45 millions. So that is very huge. And since IPO, it has actually came down from the price of 375 380 levels, and currently trading at a level of 240 250. But after looking all these things, the company is looking good, and so that's why I am tracking this company, and let's see how it does in the coming future. So now let's get to the next company. The next company we are going to discuss about is the Interarc Building Solutions. So this is one of the biggest player in the pre-engineered building segment. There are other players like Pennar or Kirby, and Interarc is one of the good players in this segment. Currently, it has a market cap of 3,500 crores with a ROC of 23.6 and ROE of 18. And if you take a look at the fundamentals, currently it has given a revenue of 464 crores, which is a growth of 20.25%, and their operating profit margins are 11%. And they have given a PAT of 39 crores, and also we can clearly see a growth in the EPS. And even if we take a look at their balance sheet, currently they have a reserves of 735 crores and borrowings are just 20 crores. So that is a very good sign. And even if we take a look at their cash flows, so their CFO is currently positive 54 crores and the net cash flow is positive 23 crores. So that is also a very good sign in this company. And one of the main reasons we are tracking this company today is they have got a new order of 80 crores worth from Ather Energy, and because of this reason, if you look at their stock price, so it has been going up and it went up 4% on that day when this news came. And during the current con call, the management said that for FY26, the company is expecting that the sales is going to increase 17.5%, and they are expecting that they're going to get a revenue of 2,400 crores by FY28. And one of the interesting point of this company is that 82% of the revenue comes from the repeated customers, and currently today half of the orders are more than 20 crores. So this definitely shows that the company is growing, and also this industry is seeing robust demand is because of the EV segment, the manufacturing segment, and the data center segment, which is currently growing in India. So to summarize it, this is a good growing industry and a good growing company. So we should definitely track this company for the coming future. So now the company we are going to discuss about is something which has got a negative news currently, and the company is Dixon. And one of the main reason currently is their biggest client, which is Motorola, has said that they have started outsourcing domestic volumes to Carbon. So because of this reason, the Dixon future growth has been impacted. Even Phillip Capital has said that they're going to cut their target price to 9,000 rupees from 11,000 rupees. So that is a very huge cut down which is done by the Phillip Capital. And also the current issue happening about the rare earth material part, so that issue is also adding up to the negative sentiment. And if we take a look at the technicals, so currently the stock is in a downward trend. So since this part, there was news happening about the rare earth metal thing, and after this current news, the company is down 2.3% today. But if we take a look from a valuation perspective, currently the P is 73.6, and if we compare it with the same price which it was trading around September 2024, so it was at a P of 115. But after this news, the sentiment has become so negative. So now there is a doubt about this current valuation. So will it sustain or not? That is a part of the future. Now let's get to the next news, which is about the IT sector. And currently Accenture came with the numbers that they have said that they have seen a 6.5% drop in booking and lower headcount, which is signaling near-term challenges. So after this news, even Anand Rathi firm has said that we should be very stock specific in the IT segment, and there are some good companies like Persistent, LTIM, but in my opinion, currently we should stay a little bit far from the IT companies as of now. And when the valuations and the overall economic conditions become better, so at that time we can think about entering into this segment. So now we come down to the last news, which is about MCX. So now UBS has given a buy rating and given a target price of 10,000 rupees from 7,000 rupees. So the main reasons UBS has mentioned that it is because the stronger Q1 volumes and the new product launches which has happened in this company. And also below they have mentioned that they're expecting 26% earnings CAGR for FY26 to FY28 based on the operating leverage, and they're expecting that it is going to increase by 15 to 20% compared to the last year. If we take a quick look at the technicals, so the company is trading at a upward momentum. Today it was trading at a volumes of almost 2.8 millions, and just look at this, the company is just going up and up. So thank you for watching this video. I hope this was helpful, and if you want any stock specific video out of the companies we have discussed today, you can definitely write it down in the comment section and I will make a video on that company. Till then, see you in the next video.